Hmm. Well, let's see what happens here this morning. Good morning. That's a correction. XHLD. Yeah, that was definitely one to watch, but I mean, it went crazy, huh? All right, that's it, man. GME went above, so it's over the top. HEPA. Yeah, GME went over it's the level it was gonna need to get over, so we'll see what happens now. Lots of triggers popping this morning because we got big upside. So there's just a lot going on. A lot going on this morning. I'm skeptical. We'll see. We got it in regular trading hours, 25.5 here. This is kind of like the first mark that I had, so I'm not really sure what to make of it right now because technically this S curve would be done. I mean, it always can go farther than expected, but one thing I'm curious about is whether this is gonna have like a 50% or more retrace. I think based on where the outermost creek is on GME, I think it just jumped it. But I think where's that? What, why do I do this to myself? I don't know. Well, that's not right. So ugh. Too many lines. Let's a little closer. I know you're like, why don't you just use the line extension? I don't know. I just started doing it this way, like a weirdo. All right, it's close enough. That'll be better. Yeah, I think we might end up. I don't know. I don't want to say anything actually because it's earnings coming up. Maybe we'll just pop. So in theory, like this S curve crossed up right here, the 50% is 23.51, and we did leave a gap there. So I don't want to discourage anybody, but in theory, that's a very likely place to kind of park because like come back to because if it stops here and this is about the 50-50 up from the bottom, then a retracement at this point could be quite wide. I don't know. It doesn't seem like there's enough time to do all that before April 2nd, but I'm pretty close to right here, I think, on timing for that S curve. The question is, let's say that's the middle. Let's say it doesn't go up any higher and just push the resistance. And it's going to come back down and do like a little bit of a longer term retracement. Let's just say in theory. Okay, I don't know. Maybe that doesn't happen, but we'll see. Maybe it doesn't happen. But if this were to come down into earnings, I certainly could see it coming all the way back to 23.50. It's not even that big of a deal if it does that. That would be a creek break here. That's the only problem. So I don't know. Where would that goes to April 2nd or April 1st. So, I mean, in theory, that could be like the middle, but I don't think that makes a lot of sense. Usually with the S curve up, this is just leg 1, then you have chop, and then you got leg 2. I wonder if we're going to even get a leg 2. So this morning, big ups across the market overall. Looks very bullish, at least out the gate. But, you know, volume is a big factor here. If we don't get a good influx of volume today, I think this is going to slip. This is definitely above the creek here on IWM. So, I mean, there's a set of parallels, but if you were to just draw across, kind of basic like, and I think I went a little low on that one, but I was using like bottom parallels here as well. I was trying to like kind of match it up. And that looks right, so I'm not going to change it. Even though that wick came higher, we're making higher highs now. And remember, like we had talked about on Friday how the market kind of like crushed it. I think it was purely because of, I think it was quadruple witching or something. I mean, there's a lot going on. There was a lot going on Friday. And I would not be surprised if the option sellers just really like knocked it down a peg to try to keep it from moving too far, too fast. And last week I had sort of speculated that we would be up on Friday at certain levels, and we were down on Friday. So throw it all out, Booksy, throw it all out. I didn't throw it out. I just kind of stayed the course. And with GME earnings tomorrow, I think you've got a decent chance this could stay bullish. I'm still skeptical. Like right now, I'm feeling like if you're gonna take a break, really now is the time. I know it's kind of a bummer. We just pushed up above this top, but the thing is, if it goes straight up, which is kind of what I thought at first might happen, right into earnings here. I have this other one up like straight to the top. I don't know. We may only get as high as this kind of yellow line right here, like 28. You're in a better situation if you do a backup and you advance. Hey, good morning. Oh, that's good for HEPA. That's good. Yeah, so like when you look at the big picture here, everything looks okay. Nothing's like particularly great. I'm a little nervous about the size of some of these gaps and stuff, but in theory, we did a creek jump. Broader market, S&P 500 did as well. It's up quite a bit. It's kind of silly looking back at the charts to see how much Friday was I mean, I don't know if you'd say it was unnecessary at this point. When you look at the S&P 500, it's kind of like, yeah, just you can kind of tell it was like clearly like pressed down, you know, just for that day. And I would have said again, this is a creek cross, but then look at the dump there, and then the rebreak. I mean, it's kind of dumb. Like it's almost painful how it held that level. It failed to keep above 565, which was a critical point of interest. I mean, it was the previous support here. So they'd done enough to knock it down. It went right to where we thought it was going to go, which is great because we were thinking that if it broke back down through 565, it'd probably come down to here, this level at 560 or about 560, 550. So it looks like the lowest is like 558, but I had just said the previous floor here in this region. But I mean, just look at it. It basically like looked like it was going up. There was a little sign of weakness there, so then it came back down in a distributive fashion and it kind of closed, unfortunately, a little bit on the nose here, and then it drops. But then it just re-breaks on Friday. I mean, it's just clearly I don't want to say manipulation day, but it's kind of what it was. Fridays tend to be kind of butchered sometimes. It's like in a stronger world, I think this would not have advanced too quickly, would have come back down. Clearly, like they were trying to instigate an early sell-off there. So the rest of this is exactly what we thought. It probably comes up to near, we're at the gap fill right now from March 7th. We were talking about that March 4th date a lot last week and how everything looked like it should be heading towards like that March 4th date on the whole. And some of them were a little different. SPY was actually higher. Same thing here. We had a mild cross up Friday and then it dropped back below and then it broke again. And then it closed pretty strong. It closed up above all of the creeks, like the down and up, right? The ice and like the main downward creek. There's really nothing wrong with this on AMC unless there's a distribution, right? And could be a cat ear. We could always say that, sure. So what you're going to watch for here is that if there's an M cross, and there will be regardless, right? And I'm just drawing it off to the side so we can see it. If there's an M cross, you want it to cross up and over. You don't want it to cross down. So 1 might be like this, and then 2 would be pretty much like this or something like that. Okay, roughly. Those are the levels that you're going to want to kind of see jump. And it can happen very, very fast. Does not have to be this long. I'm just demonstrating for your benefit, my benefit, that's what that would look like roughly. So as long as this happens in a cross up fashion, you're good. I guess what we don't want to see is that it does like multiple up thrusts, makes signs of weakness by like popping through here and then just fails to jump. That's what the distribution would look like this kind of thing. So just be mindful of the difference of the two. Really by the second bigger wave, so this is like 1 wave, 2 wave, the second bigger wave you want to be out. So if you happen to be able to see it, I'm not sure we're going to be able to see it because I don't know how fast this is going to go. But if we can see it, you'd want to count 1, 2, and then by 3, 4, you got to be above. Because almost without fail, hey, Otto, stop. Cat's like screaming, like howling. You got to be above. So Tesla's up 7.4%. Glad I picked up those calls. Yeah, so anyways, it's much the same this morning. Everything kind of did like a fake out, breakout, then broke back down, and then broke out again. Lots of fun little twists and turns. It's hard to know the mind of the market sometimes. And I think that Friday with like quadruple witching or whatever it was probably what got us back down ultimately. Might have some issues this morning with these cats. Yeah, GME earnings is definitely one thing that could be like a catalyst event here, but like I said, this is actually a pretty good spot to see it pivot down. If by earnings, and I can't tell you guys what to do with your trades, but if by earnings it's down here around 24 down to 23, this zone, it's going to depend, I think, on whether or not it holds this level. I'm more inclined to think if it holds above 24, that it's really strong. And if it breaks down, that could be a weakness. Just bear in mind that that's not a guarantee. But I do think we have a break above this high here. We talked about these re-advances that need to push. This pushed it. So at this point, there's no problems, is what I'm trying to say. Like if it went back down to get a retracement, it still looks pretty healthy to me at this point. Of concern might be volume. Volume's still really, really low. This looks like a very bearish kind of flag type volume, just really low, push back up. But again, you know, if we think that this is an after earnings run versus a pre-earnings run, then maybe you don't expect a lot of volume until earnings. I'm not really expecting a huge amount of anything here. I'm curious about this April 2nd business because the more we kind of dance around it, the more I'm wondering if this is actually going to be a kind of market catalyst. I really was thinking that at some point this is probably going to be um, bullish into that day and then rug pull. And most of the market looked that way, looked geared that direction. But at the same time, I'm starting to wonder if good news could be kind of wrapped up in bad news there. Because sometimes when we think about news-driven or news-related type pumps or whatever, it could be priced in already, and then it's a sell the news kind of moment, which would be whatever. But I was thinking about these tariffs, and I was like, they're not quite the same because as like a normal news event, because we've already come way down. We did a 10% move on SPY, which is correction. I don't necessarily think it's over. I've been pretty vocal about that. I think it's very possible this is just kind of like a halfway point, which is not great for everybody, I know, but it is what it is. Like, I'm of that mind right now that this might be a bigger market correction, and then we're going to have a mid to late year rally. And I think that's fine. I don't really worry about it. But I was thinking about this April 2nd thing, and I was like, there's really only a few outcomes, right? It's not that complex. One is the tariffs actually go through. There's no negotiation that's taken place behind closed doors. There's no resolution. And then there's these reciprocal tariffs, right? And so we see what that spurns, right? If that happens, they go through, there's reciprocal tariffs, etc. Two is that there is some kind of deal that's struck. And the deal that's struck is probably going to be looked at favorably if it's a good outcome. Or three, they're delayed, which has already happened a few times for different tariffs. The delaying of tariffs doesn't seem to give us ultimately like any kind of a bull run. I think the last two times tariffs were delayed, if memory serves, it's crazy that the market's even acting this way. We got temporary upside followed by longer downside. That's what I remember. So we got little pops that were followed by longer periods of down. Again, going into this kind of like correction phase in the market. And we're not quite at a bear market yet, but we might get there. So where there's only three outcomes, it's not that big of a deal to kind of speculate. And I feel like if the tariffs get delayed, it could be, again, that temporary pop. So I was thinking about how like April 2nd might seem like, and I don't want to try to read the mind of the president-elect or the elected president, excuse me, or the mind of the market. And I think there's going to be danger in trying to predict these things. But I don't think it's horrible to just kind of speculate on what might happen. Even if I don't really advise trading it, I don't think it's wise. I think this is the trade based on technicals, but yeah, I don't know. I could see that being a temporary positive catalyst if they're kind of kicked down the road. One reason being is that it might give us more of a window into what is actually going on. Like, are they used as leverage? If the tariffs go into place, which is reciprocal tariffs, yeah, that could be temporarily seen as a bad thing, depending on how, again, like that Atlanta GDP Now indicator really screwed everybody up. The Bank of Atlanta or whatever did that GDP Now indicator, and that made the whole market dump because they saw negative GDP growth instead of a contraction, at least at first. Now it's been adjusted. But I'm like, those kinds of things definitely would impact GDP, but if they're just temporary, then it's just a bunch of noise. Like, it's just fear. I mean, think about it. Yeah, it's possible that these things go into play and they never change, but that doesn't seem to be the end goal. I don't think most people looking at this situation would probably... The reason that the market's so volatile is because people don't know what the president's thinking. He's pretty comfortable just not letting people know what he's doing. So What? I just looked over and I was like, what? Jen, what? You're awesome. What? That's so cool. Thanks very much. Very good. Thank you so much. Very cool. That's awesome. Yeah, memberships are just a little bonus. Just lets me know that you guys are connected. We're using those funds for sponsoring martial arts students that can't afford it. Whether or not that's like something you really care about, I don't know, but I am. That's what they're dedicated for. So anytime I see those membership fees go in, I'm putting them away in a little fund, and we have enough to sponsor somebody. I just haven't had anyone come forward with a need just yet, but I am working closely with the local group to make that happen. So we had one person who was a potential person, but they didn't want it. So I was like, okay. It's like, well, whatever. There must have been something else going on. That's what I suspect. They didn't really, it wasn't just about the money. It was probably about the time that was taken. So anyways, yeah, but we'll work it out. So I appreciate that. Right. So in the grand scheme, man, Tesla's just on a tear here. It's up 7.35%. I wonder what my calls did this morning. 7.5%. I mean, I knew it looked bullish. This was one that I called out last week, and I said I was getting in it. I wish I'd posted that on the Discord, but I forgot to post the trade, which is kind of a bummer. They're up 200%. So I guess I have to sell. I have one. I only bought one call. Oh man, I'm so dumb, dude. I beat myself up, man. I know you shouldn't do that to yourself, but like, what was I thinking? Why did I only buy one call? It was such an easy trade. I was so bullish about Tesla this week. I knew it was gonna pop. I even had like high targets in mind. I was like, oh, it's gonna go up. It's gonna pop up to 280. I think if it gets that far, I'm definitely gonna have to sell it. Oh man, that would have been nice to have more than one option. 200%, it's a big gain. That makes the week for me. They weren't that expensive. I bought them for $200, but they're up to $600 now. They're like, that math doesn't add up, Booksy. I know. I don't really know why. 200. Oh, because it's 200%, not 100%. Still, that's not bad. $500, $400. That's not a bad trade. I'll take it. My Fang calls, on the other hand, are just dead. I had bought 175s for March 28th. I mean, by all means, they should have gone up, but I don't. They just didn't. There's no volume. So if I can't make some money back from those, this is going to end up being like a scratch anyways, even though Tesla is great here. 8% up, geez. Yeah, so like this is a ridiculous trade. This is a 20% trade. But for some reason, nobody wants these contracts. Like, no one thinks it's going to run far. I don't get it, because even if you just went to the top of the range here, and maybe there's too many institutional traders here, and they're like, yeah, we're not taking that because it's not going to go that far. And it is a little bit divergent right now, which could be seen as negative, but it should be going up to at least this, in my opinion, it should be going up to at least 168. 175 is not like way off. You know, it's in the bracket area. I'm complaining about it, but it's really frustrating because when you make a good trade, it's like, okay, well, what happened, you know? I don't know. Just did not come back to life. I have IWM calls for April 4th up to 220. They're up 80% today, but on the whole, some of them are like red. I have like half that are red and half that are flipping green. So not exactly the best. It's kind of in the middle right now. And I don't think it's necessarily going to get to 220, but again, it's like just playing the cheaper trades when it pops. I'm hoping for more volatility. Right now, I just want to see it hold here above 207. I didn't talk much about AMC because we really haven't seen a true advancement just yet. The outermost creek here would be this cat here from February 25th through the 3rd of March, that area. We did jump this guy and back test it, so this looks healthy. I think it's done. I think that's finished. This is also back test here. So those triangulations have finished. At this point, we want to just see it hold up here. I mean, I had it drawn off to the side a little. We want to see this hold. If it breaks down, I won't say that it's not possible that this is good because I'm counting waves here, and I'm trying my best to sort of figure out what's the best situation. But like, I want to say that even if this came down, it could be a pretty deep move back. That could be a double bottom. And maybe if we're looking at something similar I mean, it could come all the way back down again, and that actually would be okay. It just can't head fake here on this creek, like sideways like this. Can't hook on that marker. And that's either going to be really subtle, like I've drawn out off to the side here, or it could be something more dramatic like this, right, where it pops and then drops. So we'll have to keep an eye on it. These levels so far look good, but I don't know. I want it to just kind of hold. It'd be nice if it just held strong right here and then pushed. That's the easier way through. Just keep above 3 and go. Yeah, I gotta just let Tesla ride. I gotta take the biggest gain I can. It's kind of dangerous, but where else might it stop? Maybe on this floor. My target is way up here at 279, but it's based on a few different things. I need to make sure I identify other places it could stop. This looks like a contender right here. 273. Actually, that might be a better place to get out. I don't know, man. It's so close. It's already up 8.3%. Maybe I'll do like a trailing stop or something. And just let it be. Just do like 10 cents. Yeah, I'm going to have to do it. It's 221% gain. So I bought them at average cost of $1.98, and they're currently selling for $6.35. So I think I just have to go with it. So what I'm going to do is, I mean, that's crazy. I'll just do like a 20-cent trail. It's contracting right now. I kind of don't want it to drop below 400. Right. Got it. It's close enough. That's good. I'll just leave it at that. All right. Hopefully that doesn't screw me over. You know, I've done these trailing stops before, and they just don't work. There's some kind of road construction going on, isn't there? I wonder if they're starting on our road or up on this corner. That's not always going to be great. We're going to be going off-roading. Thanks, I appreciate that. Terrible trader. Well, all right. When you identify a really good trade like that, it doesn't really matter what you think about the company. And I said this before, like, I don't really care what your political views are right now on that, because the trade itself was really solid. It may go pretty far. It may pull back here, but I set a trailing stop about 20 cents, which, I mean, it may be pretty fast to get rid of it, because it's obviously high volatility right now. So those swings can be pretty big. And it's already gone. So, yep. Now it's going to take off. I feel like they do that on purpose. I don't know. Like, here, let's dip back down. And I quietly also made another trade on AMD. So I'm out of, that's a 200% profit. That's a huge profit for me, so I'm happy with that. I think I bought in down here on this jump. I don't know, something about that when it held that level, I thought that looked really good. If you had traded just shares, it's a 15% move, that's 200% profit. Now, to contrast, like I said before, I did the exact same thing on FANG. I bought in here. I mean, it's no different in some ways. It's going to be like a 20% move in the end from the bottom. I didn't buy in on the bottom. I bought in right here when it pushed out. And it's just not moving. So maybe this will grow more. I don't know. I'm not going to throw money back at it right now. I really wanted to catch the first big pop, so I got that. The rest of this is anybody's guess. I mean, in theory, it could go up as high as 278. It could go up to 298 or even 300. I had bought 300 strike. I thought that seemed reasonable to me. If it pulls back again, and you never know, if it pulls back to get to this top, we didn't check this top, it could, then I'm going to be pretty bullish about, I might even bring this up a little and just set an alert. I'll probably consider getting in again on like a local breakout right here. Yeah, all right. Well, I don't know why you're doing that. So, because I think that's a good level for re-entry if it does come back down. If it doesn't come back down, it's just momentum at this point. Let's see how far it goes. Nice little wick here on AMC, pulling it back up. I'm not gonna say unfortunately. I don't think there's anything unfortunate about this, but I do think that it hit the top of my range here on GME. So we'll see. I'm not saying it can't go. I'm just thinking about earnings, and I'm like, sometimes we just run into earnings. This is a lot of volume. It's kind of both ways, right? It's either going to be a nice big break here that kind of pumps up past the bigger arc, in which case this is more of like a 50-50 drive, and I think you could end up way up here near 28 pretty quickly by earnings. Just kind of pump all the way up. But because this S-curve is finished and it just jumped the outer creek, I'm inclined to think it could come back down to 24, and I don't think that would be bad. I think if it lands on 24 at earnings, that could be potentially very, very positive. So I'm actually going to put an alert down here, because I think that would be a really good buy-in level if it comes back. And if it doesn't, again, it's just momentum, straightforward. So, yeah, I had bought IWM 220 strikes. I bought Tesla for 300. I'm out of Tesla, and I'm not unhappy. I'm happy with it. It's 200%, but I have to make up some ground here and kind of pull back from some losses from last month. I told you guys I had a great month and a half, then I had a pretty bad month and a half. So Easy come, easy go, I guess. If you don't protect those wins. I wasn't expecting the market to do what it did. I knew there could be some downside. I didn't think it was going to be as bad as it was. And here we are, right? And now I'm like, okay, well, we may actually see more downside. But I'm not going to shy away from good trades if they're there. So Tesla was one I liked. So if the market does have a pullback period, and I'm not really sure, there's kind of a mixed set of technicals here. I could see why they would come back to here. I could see why AMC might come back to here or go sideways. I could see why GME might pull back to 24. IWM, it's got a pretty big gap. And so does SPY over here. This is just a 3x ETF thing. These are dangerous, but they're good for like swing trades if you want to swing them. They do give you a different perspective sometimes, kind of exaggerated moves of the other charts. So, and it's interesting to see sometimes how far they go or don't go. I think it's fascinating. So yeah, I'm thinking that it's not impossible. We're up almost 2% on IWM. We could lose like half of that today and then go tomorrow. Mondays are usually your bigger up days if it's green. Let's see here. Plenty of room on the 4 hour to run. The 1 hour is not there yet. It's not overbought yet. I'm not seeing any particular issue with the 1 hour here. It really just looks like it finally got its footing, to be honest. Like it finally pulled back, got its footing, and then ran. This was like a kind of a fake start. The 1 hour on the MACD is crossing over, dipped below 0, and then it's just a complete inversion of it. This is a weird looking drop here. You usually don't see ledges like that. Very strange. I know futures were turning green early yesterday or whatever it was. I saw some posts about it early in the market, I should say. Oh, Tesla like rocketed. Well, I mean, good on you if you held it. I would have held if I had more than one call, but I didn't. I only had one. So bought it for real cheap. Sold it for a lot, so I'm happy. But clearly, like if I had more than one, I would have held it because I think it was not quite to where I wanted it to go. I don't know. I thought my 20% was good enough, but I think it dropped so far so fast. Maybe I should have done 30 cent. C'est la vie. Shoulda, woulda, coulda. Yeah, I know I'm flopping around a little bit today. I'm just kind of like keeping my eye on everything. It's early morning still. We've only been open for 45 minutes. So a lot of times that first hour is going to determine a lot of the day. If we have a pretty strong early part of the day, we might set a trend here and just keep going. Speaking of trends, there's a chance here that we could stop a little short. There's a 1 hour moving average at 209.54. That looks suspiciously close to this 209, which is 77. I don't know why I moved that. I just did. All right. So yeah, it looks like it's kind of aiming for this pocket right here. I'm still thinking that we're going to see 214, but we got to start updating this chart now. This needs to be taken out. I'm going to leave that one. I'm going to leave those. I'm going to get rid of some of this clutter. This one, I'm not really sure what this is. I'm going to get rid of that. Let's get rid of Let's get rid of that for now. I don't know what this is. It's 208 level. It was probably from extended hours. Actually, let's undo that. We need to make sure. Tesla hit 271.13. That was that target I set up just a minute ago. Yeah, it's just in a zone where you might face some resistance, but what a candle, man. 9% up. Jeez. Dang, man. Set that stop too far. Darn it. I mean, I don't know how to... Maybe I should have just looked at the bid and the ask and picked that number instead. Seen what the spread was there. That's crazy. It's just going. Well, we'll see what happens. Hey, what's up? IWM. Yeah, there's a couple that I'm looking forward to, and I'm kind of thinking about IWM a lot. IWM has been one that's on my mind a lot because the Russell 2000 is a big part of like what we trade on this channel. A lot of the ones we trade are not the largest of large caps. There's a few here or there. Like I just traded Tesla, but that's, I mean, you don't see me do that very often. I might do it more often if I can find good call outs. But a lot of our stocks end up being the small caps, which are harder to trade sometimes. I mean, they have a lot more, unfortunately, they take a lot more of a beating when the market, like we were talking about how SPY just hit like 10% down. Well, I'm pretty sure IWM did that like a long time ago. They tend to get wrecked pretty easy, but when they're, you know, when you look at the big picture, they're kind of, I wouldn't say they're cheaper buy-in, but they are a cheaper buy-in. And you can get a lot of the same moves for a little less. I started looking at the 3X kind of ETFs. Now, these are dangerous because they're really not designed to be traded overnight. They reset their formula every day. So it's not an overtime thing. And that's really important to note because they'll say like 3 times the moves or whatever. That's not true over time. That doesn't mean if it runs 100% in a year that this is going to run 300%. That's not true at all. It might not run almost anything because on the year, because it's also doing that every day for downside moves as well. So it ends up being kind of comparable, but kind of not. Like you can see there's some areas, like if you look at the small term, these charts always look almost the same. But if you look at like larger term, sometimes it can vary quite a bit. It just depends on what's been going on. So this is one that if you can't do options, but you want a high risk, high reward play, TNA, and then there's another one that's for the bear side as well, 3X. You don't even have to short it. You can just buy the bear side. It's basically a short position, and it's leveraged, right? And then it's against it. So yeah, so there's a way to do that if you can't trade options, if you really want the greater impact. Again, I would say it's a bit dangerous, but like you can see here, like on the day, this is 2.3%, and this is 6.6%, and it's the same move, but it's just the other. It's a 3X. So the problem, of course, being that again, this is like a daily thing, and if you're not careful, you can get really butchered. I lost a lot of money in 3Xs back in my early trading days. This was over a decade ago. Because if you hold things, it will not usually work out for you. Okay? Just again, based on the math. So if you want that exposure, the Direxion, however you pronounce them, they do like 1 billion of these. I used to trade the oils one. That was the one that really got me. And yeah. And those are, again, highly dangerous. But man, Tesla's just going. I should have just kept that, man. I would have been rolling in it this morning. Shoulda, woulda, couldas. Not gonna make you happy, Booksy. Move on. Just move on. Just move on. Just get it off the screen. Happy for you if you held it, I guess. I guess. I did bought AMD. And then I was thinking Nvidia might pop, but it did not. So it's still like in its range. That's okay. Thank you. Appreciate that. I know that what I was doing was trying to protect from a big pullback if there was a drawback. Usually that first hour, it does set a trend, then you're okay. But I had levels here that I knew it would maybe go to. So for me to kind of like not trust those levels is also a question mark in my brain. When you get it right, you get it right, you know. But if you got to get scared all the time of, oh, what if it pulls back, then I think I did the right thing by setting a stop loss, but I think I maybe should have made it bigger. 20%, or excuse me, 20 cents seemed like enough because I was looking at the movements, but it just barely went down and nailed it. So it is what it is. And I've had mixed bags with trailing stops, and that was a trailing stop. Sorry, not a stop loss. So I've had mixed bags with trailing stops in the past. I don't know why, but I think because what they do is you can set it for the bid or the ask or the last trade, but sometimes the last trade is not visible, like as the bid or the ask, so you can't see it. If I update it on Fidelity, it tells me what the last trade price was, and sometimes it's not even the same at all as the bid and the ask. It's just some, you know, somebody got this trade at this price. Well, that's the last trade. So you got to be careful. I probably should have set it at the bid. That's just my fault. I was in a rush. Cooler heads prevail. Yeah, AMD's another one that I think it was just like Tesla. It had a pretty clear and evident breakout. Now I know there's a lot of messy lines here. If you can focus, I'll try to give you the biggest one, which is this top one. That's the main downtrend right now. I mean, there has been a push out of it, but it has 1, 2, 3, 4, 5, 6, 7 hits on it. I mean, it's a really tight downtrend. Very, very tight channel. It broke out of that channel, and it did so on Friday, but again, it was like everything else. It kind of like, it had closed above a couple candles. I'm on the 4-hour here. You can't really tell, but like half the day closed above it, and then it dropped back below. And then again, it broke out before the close. So it was just like some of these others that we saw where it made an advancement early day, backed up pretty far, mid to end day, and then very last minute kind of jumped above and held above. And so this morning has a pretty big upside move. It opened on this blue line, which is the middle of the greater S-curve. So if I were to draw an S-curve through this downtrend, again, it may be a little hard to see. My charts are always kind of messy, but that is actually like the main downtrend, those blue lines coming down, and those are the middle ones. So there's two that kind of straddle the middle. It may be like comparable to like a 6-8 and a, you know, 382 or something like that. Maybe not quite 50%, but just around it. And you can see that that's right where it opened. So in theory, if this is bullish, and I think it could maintain this a little bit for another few days with, you know, some moderate pullbacks here and there perhaps. I think it's likely going to come up to this level, which is right around 120. I don't think 114 is a bad estimation. I think we had talked about that level previously because of this right here. There's a cross down that happened right at 114. So I'm not saying that that's a bad level. I think it's a really good level. If you pick that one out on your own, good job. I think that's probably what I would have done as well. Good job. It's not like patronizing. Well done. Fellow trader. No, I think that's a good level, is what I'm trying to say. I agree with you. And then pat you on the head or something. Sorry. I've been in dad mode all week because my kiddo's been home on spring break, so I apologize for that. But this right here is the likely zone, so it's between 115 and 120. If you can get above 120 at some point, and it would be hard for me to see that happening without some kind of a catalyst, because like we're so close right now to April. I just don't know. I don't know how far it's going to get before that event, which could be a big catalyst event for a lot of the market, good or bad. On the 4 hour, you can see it's already overbought. It's kind of a bummer. It needs to really hold above this level. It's really like everything else, guys. It kind of looks like it could have a pullback to like 104. I mean, this is what we were talking about. Like everything looks like it could have this like pullback. It's a bear trap if it doesn't go there, because it certainly looks obvious to me like, oh, this is where we go. This is just like GME, actually. We were just looking at that. The GME has this nice S curve, and then like the 50% is right where that gap was at 223.5, and it's got earnings coming up. And that's definitely the halfway point. It's broken out. And there's a shallower hit it could make to like 24. And we were talking about this is like every single stock right now. It has this kind of level. So the shallower level on this one would definitely just be the previous top, 108. So that would be a stronger hold. So if we could see an advancement above 113, maybe 113.10 or something like that, I think that might be a good place to have a backup. And then I wouldn't mind holding, I really wouldn't mind holding 108. I think that would be even better. And then kind of re-advancing again, maybe going into Friday or Monday. I think that could be pretty strong. But the 50% here, let's see if this went far enough. Let's not jump the gun here. Yeah, we're right, dude. We're right on the money here. We nailed that. That's definitely correct. I'd make sure I lock that in because I don't want that to be willy-nilly. That breakout happened. And then the middle, you can see, is that contended area right around 104.83. I might have it a little high. All right, so it's a mixed bag. If it's technically, if it's that low wick that happened on Friday, then it's already there. Like it's on it right now. Like 112 is the number. So it could be that it's done. If it's the 104.80, I don't remember why I picked that level above other levels. So let me zoom out of it. Let me see what's going on. I need a big picture. Look at this. Why did I pick that number? It's really specific. Usually I can remember these things pretty quick, but yeah, this is the breakdown level from August 2022. It's 2 years ago, man. That was a long time ago. A year and a half ago. This is October 21st. It broke there. All right, so it is a pretty strong level. It doesn't have a great interaction with it here per se. I mean, it's kind of where it jumped up over, like 105.74. It jumped the creek right there. So it might also be a good reason why it's a good level. These things are, yeah, that's probably why I picked it. I think I went way back to get that one because it doesn't have as much relevance right now. It looks like it's slightly off, is what I'm trying to say. All right, whatever. If that's the level, then this should push up to 113 because this looks like 112.93, which is very close to the red level of 112.84, which is this bottom, which should be 112.80, not 84. Man, These numbers are like slightly off. I probably again was using previous lows and ignoring, well, maybe ignoring some of the wicks here. All right, well, it's 112.80. So I think that those are two contended areas. So here's what I'm thinking, okay? I think we've got a big bull run here establishing, but unless you get above, and we're kind of seeing this across the board, so I know you guys are like, well, I'm not invested in AMD. I don't really care. That's fine. But just remember, like, this is pretty universal right this moment. There's a lot of stocks that are kind of pushing into these high portions, especially like your GMEs. It's already kind of like right there. I think if you get that advancement beyond it, you're probably going to see the extension to the next zone, which for AMD is not significantly higher. It's only up to like 115. But if you don't, this would be a great time to kind of pull back and relax the stock a bit. This needs to have a retest at some point on this yellow marker. If it leaves it alone and it just doesn't come back that low, then it hasn't retested this 104 breakout again, which is, again, it's okay. That's a 50% retracement, so it's not the end of the world if it does it. But it would not surprise me if we get a big up and then have some kind of trail off into the end of the week and then jump again Friday at like 109 and then go up Monday. Oh, there is a Monday. That's kind of the last day. That wouldn't surprise me. And then you get kind of this late run, because that just happened. It just happened on Friday. Do the same thing but bigger, make a bigger like S curve up, and then Monday have this kind of close here, and then Monday have this kind of like pop move again, and that's like the end of it going into Tuesday. The first, it's just an alternate path. It's not a hugely different path, because it just depends on what happens here. And I'm thinking right now it's come up to that wall. I'm not really sure if trading beyond it makes sense. I might actually exit those calls as well. I might get back in if it drops back, because I'm seeing it overbought on the 4 hour, which means it's probably overbought on every time frame below. Yeah, or nearly. Let's see what's going on really small. That's 2 hour, it's overbought. Let's see here. Let's go to the 6 minute. Yeah, it's just riding up. It's a bit of a market squeeze. I mean, a lot of this is going to be a combination of some buying and a lot of, all buying, right? But that's what buying back the shares is, but also just a lot of shorts covering from previous ranges back here. Those drop-ins that happened all the way back in February. This is a little different. And this is really interesting on AMD, because AMD had that really big wedge that then broke down. We're kind of coming back to those levels. What would make the most sense to me would definitely be to retest this floor. I mean, I don't see how you could get around it if you want like a healthy move. 107. It just doesn't seem likely that you would do this and not retest it if you're going to try to go up further. If it doesn't, again, it could just be an indication that later, after all this is kind of flushed out, it's going to come back down. Which, we're not really like surprised by that. If it came back through here, there's gaps galore all the way back down to 96. Just a massive double bottom into into May here. I still think this is kind of the bigger picture for most stocks right now anyways. It could come lower, but that's just where you would start. So highest I could see it going here is like 127 if it just rocketed. I don't think that's going to happen. So that's probably enough for AMD for now. I don't think that's very likely. let's see. Let's do some Bulkowski this morning. So 120, that 120.70 area is sort of the big one that I had. There's a gap zone there, and I thought for various reasons it might go there other than what I just did. But that's a 50-50 here over that angle. That kind of establishes a new trend and then establishes a pretty easy to read pullback level. Doesn't really matter when it gets there. Could be now, it could be right at April 1st or 2nd. Really doesn't make any difference. Not significantly anyways. I'm inclined to think it's going to do the pullback and go, but let's see if Bulkowski has something else to say about it. I haven't done a flag in a while. So Bulkowski uses pattern analysis with examples. Like he doesn't just do like one thing, okay? He does hundreds. So like this one is based on, actually this is interesting. This just says hundreds. It doesn't even say a number. Usually he actually specifies like the exact number of trades that he's done with it. So that's kind of interesting. But this flag one does not have that. Fascinating. Oh, up and down breakout targets are the same, 46%. That's not very high. That's kind of a lower end for him. Usually if they're like above 50%, that's pretty good odds. Wow, this is complicated. Well, I guess it makes sense. Flags are in the market like everywhere, so there's probably like a billion different ways that they go. There are 4 combinations of the measure rule computation. I show 2 on the right. The other 2 targets are just the start of inbound trend A. Compute the height from the start of the price swing, point A, to the end of the price swing, point B, and then multiply it by the above target. Add it to the top and bottom, which is C, to get the target D. So that's one measure rule. The second measure rule is the half staff. Sometimes a flag will appear halfway. That's just the S-curve. So that's our S-curve right there. Another one, flag tilt, same thing. The best performance comes when the inbound trend is upward, leading to a breakout. That's the S-curve. You guys want to see this? It's pretty cool. It's pretty neat to see that. I don't think he'd mind. Hopefully. I'll pitch his book in a second. So this right here, this is the one measure rule, is measure this, multiply by the percentage, and then add it or subtract it. This is the half staff. These are both S-curves, which is great. We break it down a little differently because we use the M cross. Tight flag, loose flag. But we have like a trend reversal. It's not as much of a flag. So what I might do is also do a trend reversal and see if he's got one for that. I said I would pitch his book. I will. But let's see here. Let's go do T. Throwbacks, trend change, 1, 2, 3. Trend lines up, trend lines down, channels. This would constitute a monthly channel. Almost half, 41% of all long-term channels uptrends really I looked at started near the end of a bear market. Well, that's not quite there yet, but few 20% end up because of one approach. These are complicated too. All right, this would be really in depth. So I don't know if we're going to be able to do that because I'd have to go through this like step by step. He's got a lot there. This is cool, man. He's got like 1, 2, 3 trend change. That's like 1, 2, and then 3. It's a breakout. It's like an Elliott wave. Let's see that. It's like almost like an Elliott wave reversal. 1, 2, 3. Abercrombie and Fitch. Price tests a recent low. That's 2. Point 2 can be below point A, but must be clear that price is moving up, not continuing down. "73% of the time, price climbs at least 20% from the low." Oh, he's using this right here. 1, 2. That's interesting. That's a pretty high amount. In a study I conducted, 73% of the time, 74 out of 101 samples, climbed at least 20% from the low A. I don't think we quite have that, because we didn't get a higher low. But that's an interesting little example, because like if you're talking about that and then 20% from that point up, that's pretty high. That's pretty consistent too. 70% of the time is quite a lot. Here you go. Here's one of his books, Trading Classic Chart Patterns. Yes, I'm pitching his books. I don't care. I don't know how to pronounce your name, this NN guy. It's so funny. You have so many lines. I'm not really going to take offense to that, because most people say the same thing. So the reason that I have a lot of lines is just the way my brain works with it. It's not about, when I say anything can happen, I don't know. It depends on what happens. When I say it depends on what happens, I think that's just a generalized market statement about the April 2nd thing. And when I say like if-then statements, I also think that's generalized. I don't think you'd open any stock traders and say that this is going to happen. This is definitely going to happen. That's an irresponsible way to trade, because if you look at the market and you say this is definitely going to happen, well, you have to be confident in your trades. I think it's a bit silly to kind of open up a stream. You're wasting your time really to open it up and to not hear it out and just immediately make a judgment. So this really speaks more about you and your approach to this than anything else. The first thing you want to do when you open up a stream is what? Call out somebody? Like, I don't know. What? Like, that's not really about me. That's really about you. So, because people who are sitting here like listening, when we walk through these lines that are not random, they're not random at all. They indicate creek crosses. They indicate pivot points. And the big thing about the creeks and the pivots is that they're just long-term resistances or short-term resistances in some cases. But they're resistances and or supports that are used in a wave technique. Now, I keep a lot of them on the screen because I can handle that, and I don't mind it. I admit freely that they look like a mess to somebody coming in, and that doesn't bother me. It doesn't bother me because I know what every one of these is. Like, I know that there's some of these that are more or less just trends. I know that others represent larger trends. I know that this particular yellow line right here represents a wave trend, like a waveform, a middle. And that when it reaches that middle, you're likely going to get a turn, and we did. So, like, I don't worry about these things as much as the next person coming in because I know what they mean. I know what this is an S-curve and where the 50% retracement is at 127. Like, I know that these upper lines that are trending up are long-term upper trends. Now, what a lot of people do is they will keep multiple charts. Go look at, like, Wrench Capital, okay? I don't mind him. I think he's a pretty good guy. I mean, I don't know him, but I like this stuff. Go look at his charts. He's probably got like 3 different time frames open when he's trading. I have like 1, and I'll flip between them. I like to keep my stuff on one layout. If that confuses you, like, okay, that's fine. But if me saying it depends on what happens makes you think that somehow like I'm an incompetent trader or I don't know what I'm talking about, or that anyone can make that assessment. Well, you're not wrong. I mean, anyone can make that assessment. And in fact, anyone probably does make that assessment. Go read a Morgan Stanley analyst, somebody who's paid professionally to do this. And what you're going to find is that they say the same thing. It depends on this, this, and this. They don't try to read the minds of every outlook. That's not what they're interested in. They're long-term trading. They're really interested in protecting their assets, and they've got different goals in mind, but they'll say the same thing. They'll say, we think that the market is going to do this, this, and this, but it depends on certain outcomes. You can't know what you don't know, and that's okay. By me saying like if-then statements, it just really prepares me mentally to make those trades. If this comes back down to these particular levels, then I'm going to make a trade. I'm going to be looking for the next break and make a trade. What's wrong with saying that? The whole point of this is to try to make money. If it breaks this level, then I know this is a critical level. I just said a few minutes ago that I don't know if it's going to hold at 1111 or go ahead and come up to 1128 because I'm not really positive about the center here. That's okay. I'm not ashamed to say that. But I do think that this 104.83 was something I marked off as a historical anchor point. So there should be some kind of 50-50. But if we're griping about, at this point, if you're coming onto a stream and griping because somebody's got a 1% variable range here, I mean, you got other problems with your expectations of what you would expect from somebody on these platforms. I don't personally gripe about it. The fact that I share that with you is just me sharing it with you. I could just not say it, but that's irresponsible in my opinion. It's not ethical. I need to be clear about, hey, I'm not 100% certain about this. But I'm sorry. I'm not going to apologize for the lines when they give me the information they give me. I know how to read them. If you can't read them, I do apologize, but you can stick around or you can not. You obviously had to subscribe in order to comment on here. So if the whole reason you subscribed was so you could wait around and make a snarky comment, then you've got some bigger problems than whether or not I'm sure about 1%. And it has nothing to do with me, dude. Take the log out of your own eye. That judgment that you're passing is ridiculous. Yeah. If the first thing that you do when you open the stream is make a comment about how, terrible somebody else is, that's a problem. And that's not my problem. Because I'm pretty confident in what I've done here. In fact, I've traded it. Like I told you guys, I didn't lie. I got out a little early, but I made 200% over the weekend on Tesla. Why would I lie about that? I've also told you when I've not done well. But those are things that's okay. I mean, I had it on the chart. I called out the numbers. It hit the numbers that I called out. I'm not going to apologize for being a little messy. I explained why I thought this was bullish, why I thought this looked good. Some of these lines, are just ancillary lines. If you guys look at the moves in terms of if-then statements, you're going to be a lot more comfortable anyways in the market. But I don't know a trader alive that would look and say they're 100% sure of direction all the time. That's just ridiculous. That's the silliest thing I've ever heard. I mean, at this point, I'm like, if somebody says that, then that just shows me there's a greenhorn in the room, and I'm okay with that. But just sit and learn, or go somewhere else and sit and learn. Don't have to be me. I don't know anybody in their right mind that would look at something and say it's definitely going to happen. I said this is probably going to happen, and it happened. Based on the lines I drew, the crazy squiggly lines. So 2 things. So maybe 3 things. One, I'm happy for you guys to come in, subscribe, stick around, chill out for a bit. Maybe don't be so quick to pass judgment just because I say something that, gives you some ammunition to throw back at me. Okay, I'm a human being. It happens. But if obviously something about this works, then it's going to take a minute. You need to be a little bit patient and maybe give me the benefit of the doubt until I prove myself otherwise. Okay. Two, like I don't like to have multiple time frames for every individual stock on the screen. So I use a lot of lines that are basically either trends, creeks, or I call them crosses. Now, all three can be on this chart at the same time, and that might confuse you if you don't know what's going on, but I always do my best to explain it. Always. So I like to have multiple time frames, and I like to have all three of those on there. Does that make my charts messy as all get out? Yes, it does. Okay, I apologize that they're messy. I do, but I don't apologize for the methodology because I don't think it's wrong. I think it's just me using the techniques that I have in store. I also don't apologize for using different kinds of methodology. I like to do everything. The more evidence you have of a positive trade, the better off you're going to be, the higher probability you're going to be. And that's what this is all about. If you have one thing saying buy, but then you have 6 other things saying sell, well, probability is not really in your favor. It might work out. You could, get lucky. It could work out. Fortune favors the bold, I guess, sometimes. But I'd rather have like 5 things saying, yeah, it looks pretty positive and make that positive trade. And it doesn't have to be up. I'm just saying the direction you want it to go. So again, like I'm totally cool with people coming in and saying, yeah, it looks messy. But a lot of the reason for it is pretty obvious. Like I know what every line is for. I know why they're there. And if I don't know why they're there, then I get rid of them. Sometimes to my own detriment. So yeah, not using multiple time frames, using slightly different lines for different reasons, but really most of them indicate the same thing. They do. Okay. And I could really quickly even illustrate it just to help bolster this point. One of them is a wave. That's when you have a rotation around a point. That's one really important one. And that's a wave cross is what I call it. And it's really simple. These act as sort of a creek that's early creek that's lost, and then it's usually retested. And this typically doesn't always have to be like a 50%, but if it's an S-curve, it will be. That's a wave cross. This can go completely other direction. This could be going up, right, and have a wave cross to the upside that comes back through it and then bolsters back to it. That we call that a hook. Sometimes I'll call it like an ice. If this has had multiple supports and then it loses it, that's like an ice level. Sometimes we'll call it a hook. This can be a very, very benign structure. Like it could be sideways. This is what we see in the cat ears typically. We may have something like this. That's really more of a support, but usually it's not like that. Usually it's more like this. And then there's somewhere in the middle. It's either lost if it's weak, or if it's strong and you break out, usually there's strength in the middle and then you come back above the top. Those are all crosses. Okay, meaning like they come through the centers of a trend or a S-curve or a wave. Wave analysis is just based on sine waves. And I've talked about this pretty much constantly on here, but there's a basic principle in waves, which is that you have from peak to valley. If you can find the 50% marker, then you can identify where the next peak is going to be. And that's just mathematics. It's very simple. Why is this hard to do in the market if it's that simple? Because the market has multiple iterations. It has very small waves that are very compressed on lower time frames versus very big waves. That's often what I'm trying to do is like marry the two together. This may look like a hot mess, but I'm really trying to marry the idea that if you look here, like on Tesla, for example, this was a wave breakdown. 1, 2, 3 broke down. It didn't retest 300. It dropped through here on an S curve and then didn't come back up. Well, you have one minor trend here. You have one major trend here. And then you've got that kind of both got lost off the side. You've also got a creek retest. This is another major wave right here that comes back down in creek retests. That's a huge creek retest. That goes back to the previous all-time high. These lines are not arbitrary. Like they're there for a reason. They indicate correlation, triangulation. They indicate higher probability that the market, when it gets oversold, it's probably going to come right back to this point. And when it happened to be on a bearish divergence, it gives you a really good evidence for a potential trade. So when I look at those things, I'm like, that doesn't confuse me at all. The fact that I've got 1, 2, 3 of those layered up, yeah, it makes it messy. But that's exactly what it indicates, right? So that's a cross. The other one is a trend, which is more traditional, and that's the one that people a lot of times will look at, and this is a trend right here. Now, a trend doesn't always run with the cross, and I'll make it a different color since this is kind of bothersome to some, because maybe they can't see what I'm doing. I'll make it yellow or something here. A trend typically is going to be really obvious to the market, and there's a lot of people who like to use trends. That's a trend. Now, the interesting thing about a cross and a trend is that a cross can actually give you a really good indication of like where the next trend hit is going to be. And that's really what we're doing here when we're triangulating crosses. There's another one right here that comes up, same region, right? Now, there's a problem here in the Tesla chart in that if it does come up to this area, it begs the question like why? Because it would be breaking out of a second trend. And that's what I was trying to get at before is like, could be that this is a like leg down extension for a leg up extension, which we call like a double flush, like down in order to get liquidity, build back out, pump up. And then there's also a multitude of EMAs. This is the 90, 180, and the 200 SMA right there. So the 90 and 180 EMAs are right up at 300, for example. 350 is way up there, but that's the other one. And then again, that's like the 50% on this other guy. So there's a lot of reasons why that made sense. Well, these triangulations, when you do these crosses, sometimes can give you a really good indication. If I didn't know that this was going to break down, but I saw that move, it gives me a really solid, like, okay, this is probably, if it drops this level, going to head all the way down. And this is very tried and true and tested, I think, at this point. I don't really find this to be controversial at all. It's not always a 50-50 leg, but it's very simple, which is that bears are directing it one way or bulls are directing it one way if you to flip it, right? And then it's lost, and then it regained. They're going to go right back to the target they were originally aiming for. It's very simple. So trends can be really great when used in combination with a cross. Now, a creek can be both of these things. Weirdly enough, this can be a creek as well. This could be a creek at first, because it could be that this is, again, one of those things where it's like this could have a trend coming down that originally kind of widens out, and we might call that a creek until it builds out larger, and then we say, okay, well, really this is crossed up and over, now it's a cross. So it's like an evolution of the line. So this could be originally seen as like a creek and or a trend. Why not? Because there could have been a trend here, right? Creeks are just representative of resistance. That's all it means. It can be more than one thing. And the idea of creeks were developed before the idea of EMAs. Nowadays, we find that EMAs often act like a creek, and they're flexible that way. Well, I would say this is that when you have a creek stays there, it stays flexible, but it also can evolve. So like in this case, if this jumped the creek, which is what happened, I would not say that there's no creek there. I would say that this creek did get jumped. It could provide some support later on if it's curving up, as in like like an EMA might, if you jumped an EMA and came back down on top of it. But I'd also say that the creek has now changed because it's risen. And so I would look at the extremity value, which is here. This was the last time it made a higher high, right? And then it starts going down. Now it's broken out from recent highs. It's coming back up, so on and so forth, right? So this ends up being a new creek, potentially, right there. Now, would I call that a trend? Maybe, maybe not. It may not have a lot on the bottom to support it as a trend. In this case, it's just two tops, but it is a creek. Creeks evolve, they change over time, and they move. Now, at this point, what's the problem? Well, it hasn't actually made a new higher low. It hasn't actually, in this little example, hasn't made a higher low. It's pushed up, made a lower high, So at this point, the creek's still downward. It hasn't jumped that creek. Naturally, when we see the flow, if this were to make a higher low and bounce here instead of what I have, which is like a hook, then the lower creek's being retested. It jumps the trend, does both. And this is how you see the turnaround. You'll see an S curve up, like a 50-50 kind of deal. And there you go. That's a market turnaround right there, like in a nutshell. Now it's made a higher high. It's pushed up. And at this point, if it's successful, this should make a higher push. That's like an SOS, sign of strength. And that's usually where we start seeing, oh, it's coming across horizontally. Now the creek's curved up. And I'm not drawing a curve, but you would have it like, oh, it's coming up. Now, all of these lines together, if you just come and look at a chart, you're going to sit here and be like, hey, man, I don't think I understand what you're doing. It just looks like craziness. What do you mean all these what-if statements? Well, we don't know for a fact that when it comes down, it holds. That's dependent on liquidity. We can make estimations based on what we've seen, what we think is going on in the market, and then this is where you look at the big picture and you say, all right, in the bigger picture, does this still need to go up? If in the bigger picture it looks like it's poised to go up, then there's a greater probability that it's going to take this path. I'll make it white. And it's going to cross up and over, and yeah, that's it. We can say that with more surety. So going into the end of March, what did I say? And most of you guys who've been here know that this is what I've been talking about. Like, yeah, it's been frustrating for the last month, but I said going into late March, you're going to have a pop. The market's going to pop. I've been saying it like nonstop. Not because of options, not because of this or that, but because when you layer these up, the higher time frames are like pivoting, and you need market relief. You need a bounce. Even the most bearish bears understand that they need to have retracement and retest certain levels. Like they have to go back and get more sellers. Just like when you're going up, you have to back up and get more buyers. So you look at these things, it may seem a little ridiculous to come onto a stream and see this kind of stuff on there. But if you understand my mind about it, then this is like a really easy triangulation method. It seems hard, I suppose. It seems like haphazard. It seems like it's just rife with probability, flipping coins or something. That's not really true. This is not a coin flip so much as it is like we just need to know what's going on in the bigger picture and make the most likely probability. But I got to be honest when I say like that even if you have a 60-40 chance that something's probably going to go up, it looks really bullish, or it looks more bullish than bearish. There's still a 40% chance you're wrong, you know? So like even in the best circumstances, there's never like 100% chance of anything in the market. I'm sorry. This Tesla example is about as close as you're going to find for me getting like super bullish. Because this Tesla example was one that I looked at last week and really looked at it before then. I looked at it when it was over here. And I was talking about it dropping down to like 270 to 250. Went lower. But I had posted about it in the Discord group. I was like, this has got a really strong chance based on where it is on the big picture, 4 hour and up, that this has not made the correct backups yet. It needs to come back up to this level. It's that simple. And when you start looking at then the smaller picture build out, the divergences, et cetera, I mean, this is a pretty straightforward move that did yield great results. So I don't know what people expect me to say when they come on and they say, look at all these lines and you're so uncertain. And I'm like, I'm talking on a stream to people I can't see. If you were sitting in the room with me, we'd probably be having a real conversation. Like we would just be talking about it. It wouldn't be just me like rambling on, you know, while you're just sitting there quietly. That would be ridiculous and rude. We don't have that. So we just have me talking and rambling on. And so you hear me say things like, well, I'm not 100% about this, or I'm not 100% about that. Well, of course I'm not. That's just to say I'm human. And I'm not an animal or a machine, I should say, that's going to be sitting here calculating things perfectly. And when I say it depends on what happens, what I'm saying is like, if I don't know for sure, like this is a good example. Like GME to me, this is a stock that has had historically like really long-term overbought times where it just gets overbought and it just keeps going. And it's happened more than once. It goes way beyond what you would expect. Okay? I can look at the 1 hour here and just very simply look at this like anybody can. You don't need someone to do this for you and say it's overbought. But what I can also say is that it technically just jumped a creek down here at like 24.5 and it's a 50-50 up. It would be a good time to have a backup. Now you might say, well, yeah, but if it just keeps going, then what? Well, I don't know. That's not really my fault that I don't know. I know that the next level up is 27.28. That's the only thing I could kind of venture a guess at in terms of upside. It's there. But if we're just talking about like, hey, what if we were going to come back and test the creek? Look, man, you could take a pop right here and go all the way up to 27.70 and then have a full 618 retracement, which might look really bad to the naked eye. But you could have a 618 retracement right before earnings and come back down to 24 or something like that. This could have a massive push and then a 618 retracement back down to this gap level at 24. Who's to say? So the question then turns around and it goes back to the person who's saying like, well, you don't know, ha ha ha, anyone can do that. And I'm like, okay, well then give me your answer. Because at the end of the day, we would both look at the same information and have to draw a conclusion as to what we think is going to happen. On the 4 hour, is there still room to run? Sure. But I got to say, man, like on the 4 hour, it's not looking good for GME. If the goal here is to pump it into earnings, then it looks like it's pumping into earnings. It doesn't look like it's going to go way beyond afterwards. It's already basically made the full length from bottom to top here on the RSI on 4 hour, which is pretty decent high time frame. It's not daily, weekly, but it's up there. So if you want to pop on earnings, it'd be better to come back down now and chill out and then pop on earnings. Otherwise, if it just keeps going up, it seems pretty unlikely it's just going to keep going afterwards. It seems more likely it's going to come back down. That's a if-then statement. That's a I don't know exactly and it depends on what happens statement. But looking at the chart, that's my assessment. And I'm not going to apologize for saying that. So an apologetic for my methods sometimes happens on this stream because people will come in and say things like that. And I understand it. I do. And I'm not trying to belittle anybody or make anyone feel like I'm condescending or something. I'm just saying this is the way I do it. This is why I do it. And I think it's fair for me to have to defend myself every now and then just to say like, well, here's the reason why I have all these lines. The bit about uncertainty or whatever, I don't know how that doesn't apply universally to everybody. Like you could go in and levy that critique on anyone in the market and it would probably be true. I mean, and that's okay. Well, you're not 100% certain? Garbage. It's like, all right, well, your standards are kind of whack. I don't know where that's coming from, but you obviously know something I don't know if you think that the market could be 100% about something at any given point. And man, this Tesla thing is on a tear still. I'm really just impressed by that move. All right, let's get back to what I was talking about because I got side railed by the attempt to troll. You're like, attempt to troll? He got you, man. No, he didn't. I'm not mad. I'm not. I'm just defending what I do. That's my response. And that's all there is to it. I'm not angry. If they continue to do it, then I'll just boot them. If they continue to be like, I don't know, willfully ignorant about what I just said and just to kind of ignore me, then I'll just ignore them. We'll move on. I like to try to give people a chance to hear me out. Although I don't know if he stayed. You did walk into it? Yeah. AMD is where we were. Now I'm trying to find it. It was not, it was a rant, but it wasn't like anti anybody. I was just talking about, the guy said stuff, you can read it up there. It was just a silly thing. It was very like quick. And I just went through my method and why I do what I do and what these lines represent. And why I use probability to talk about stuff and not absolute terminology in the market. So I am as anyone is. I'm not always right, but I do get it right quite a bit. And today is one of those days. This week is one of those weeks. Last week, not so much in terms of like when I started talking about this. I was really hoping that by the 21st, which is kind of true, it's kind of not. We had turned around by then. I mean, like this is an M cross. This is a 1-2. This is a wave jump right here. We had turned around by the 21st. I was hopeful that by the 21st we would really see that bigger move up, and that didn't happen. So you can fault me there if you want. I'm so annoyed by Fang right now, guys. I can't even with this stock. It's just one dead trade. I cannot understand it. I might have to just roll, but it's expensive. Man. I mean, I'm glad I bought some shares with it too, but pretty annoyed. You asked me about Wolf. I'm out of Wolf for now. I do like the trade on the whole. I'll get back to AMD, don't worry. And like I said, I was wrong about it. So in terms of timing, so like I had mistakenly assessed that this would be up going into the 21st. So like I don't know why I thought that. I didn't really think that the timing was going to be that slow here. It does the nice 1-2 walkover. Everything about it looks pretty clean in the end. I think it goes back to here because I didn't think it was going to come back down again. Even though there's a gap, I didn't think it would come back and make a lower low right there. It did end up filling the gap, which is great. But I had thought that at that point it would have crossed up and over here, the major creek, and then jumped. So I don't have it on the chart quite right. It had to do with this, remember? So you can see my line going up. So was this completely off? Meh. It was a little off. Instead, what we got is a longer M cross, and now we're probably going to go up. And I'm like out of the trade. So I had calls, and they just got butchered. They weren't going anywhere. They got destroyed right here. So I think I bought in way back, but then I had some for early March that I had bought out to the end of March. It just didn't go far enough. It's that simple. And some of that doesn't really have much to do, in my opinion, with TA as much as it does with just bad trading practice. You know, if you think it's going to end March 21st, probably better just to go a couple weeks after that. I mean, it's that simple. I mean, that would have saved me a lot of headache. And here you can see a potential here that this could cross up and go pretty far. I think if you're in Wolf, I wouldn't be surprised. It may not be today, it might be tomorrow or Wednesday. I would not be surprised if this ends up coming up to, actually let me use this. And this is a pretty big move right here. If we have something this way, it could be very similar. That's the first wave right there. Yeah, that's the trend. That's the creek, right? So it's like bending upward. And then I have this guy as a cross from the low end, but really we should probably redraw it because now we have an extra wick there. And I promise I'm not lining it up. I'm actually lining it up over here. Looks like I'm fudging it, but I'm not doing that on purpose. It looks like I'm like making it go in my favor. Like, oh, see, it goes right there. No, it really does. If you look at this right here, this is the wave cross. Hits, drops, rolls over, hits, rolls over. That's the inversion. So look at this motion. And then this is the 50-50. And then this motion right here. That's what I'm mapping right now. That's the inversion right there. And you can see that support over here, resistance over here, and then that intersection would be the cross down. There might be a lower one if we use the 50-50 for the wave. So again, here comes the extra lines, right? And that one's pretty low. This seems to intersect this guy, this wick, and this guy. So we got a couple different trajectories. If you look at the original wave motion here and here, they're pretty much the same every time. So those are very similar moves. Buy in, drop, buy in, drop. This would be the middle. One of the other things I don't really talk about that much, but if you look at an M and you look at the middle, the M in the middle is usually a bit lower. Like it tests low because that's the middle spring, if you will. That's the bigger wave, remember? Because this is ultimately not just one, this is multiple layers of iteration. So this is like this kind of a move here. Okay, so when I look at this, that's kind of what I'm seeing right now, and I think I just mistimed it. That's all there is to it. So am I still looking at Wolf? Kind of. It's in the rearview mirror for the moment, but I think that it probably is breaking out. And this is the long-term trend that we've failed to jump. So this started back in December. Again, looking at these where the gap down happened, top, tiny M cross. You can see the iteration, big move, tiny move, working back out. It looks kind of distributive to me because this middle is very low. So if you want, we can use something like this to help determine maybe where it goes. And I had said possibly up to like 970 area. In terms of a wave out, I think it could go that high. But if you look at the outer wall, which is this thicker line, that does seem to show by the second you could be up at like 870, which is pretty consistent with what we're seeing right here in the rest of these measurements. So I'm thinking that it may have taken like a lower path at this point, and it probably won't make this jump and go all the way up. It'd be great if it did. Maybe again, this is where I get to the if statements. If there's a bullish catalyst on the somehow on that April 2nd news, I don't see why this couldn't go, but it looks like it's positioning itself in a way that it would already be up there by that point in time. And that would be your wave cross up, and then you'd probably have downside. So even though I've got this drawn out pretty high, I think what's more likely is that 1, 2, 3, 4, 1, 2. I think this is going to end up hooking here. And I don't know, man. Maybe this doesn't get so bad for this one. I'm not saying everything has to run in May, June, but if this ends up holding a little bit higher, no, I think it would definitely have to drop below here if it's going to drop. Yeah, it'd probably be like this. And then going into May, we'll hit the lows. The SOW is really low. It's like way down here. That's a sign of weakness. So it's very possible this could be ridiculous low on this earnings. I know it doesn't look like it would be, but if it's bearish after this, and I think it would be pretty easy to see how that could happen right here. That's wave up, middle of the cat ears, which I call this M cross. If it doesn't cross up, which is what I'm showing on the top, and it crosses down right here, I think you're going to lose. It'll probably be right at 670 at earnings, be anchored around that same point every time, and then drop through. And that's the final leg. Then I think it's go time. I do. And I think what you're likely going to see is from May forward, maybe May 14th or something like that forward, we're likely going to see that push out. And this could be the bigger run up, so long as it gets above that marker. Right in the middle. It would be right where it drops off here. This will be the center mark. Like, I don't want to guarantee that, but if I'm going to be 100% about something, it's this. If then statements included, if this happens, then this would be very likely, because that would be the middle. Because they will mark off, institutions will mark it off with like a gap down or something, probably off earnings, and that usually end up indicating like the center mark. It's like a pivot. And what's going to happen, my assessment of this, is that you're going to have like a 50-50 from this gap right here, which looks like 1371. I actually think this is probably spot on. Here, let's do this. You'll have a 1371 down through the middle. I'm not sure why I'm picking 675, but I think that's it. I think it's because of this. This is like really catching my eye right here. There's a gap level, and there's this interaction right in the middle there of this wave. You can see it visually, how it's impacting it. I feel like that's the right one. That's the wave cross in the middle, right there. And that is where the crux of it is. So I think that's where the breakdown is going to be. I think it's going to go 50-50 from that point down. And I think that this SOW is just the evidence of that at play. Like, it's already positioning itself down to get to that level. Now that $3 mark is interesting. This is not nearly as bad as it looks, because if you think about it, a lot of the other stocks in the market that may have additional drops are going to be pretty far. They'd be pretty bad. So this isn't actually that bad compared to some. I'm not sure. Thursday, maybe Friday, May 9th. And then it's just going to build back out. This is like a spring. Yeah, and then the intersection of the floor here. Notice how that's in the same pocket that you need to jump back over. Right there. On top of that creek. And then also notice that the 50% down from here to here is right there as well. So it's a 50% retracement from that level to that level. From the 670 all the way down to 3. It's a big reduction, I know. But then that valuation is a pretty huge deal. Actually, everything's kind of right where it should be if that distributes, okay? Then the next move would be a 50-50 up, which again, it may seem like this is somehow like really bad or something, but it's not. Tuesday, the 27th, I think it's running up. And this is where you can get a 50-50 cross back up. So now we're really just looking at the same numbers, but back to the upside. I don't need that. And this is how it gets to the gap fill. Now, after that point, things change, because if you did make that move, that's a pretty huge move going into the 9th probably. Let's see what that percentage is, guys. That's bigger than it looks. That's really big. That's $3 up to, it's a 350% move. And you might get a little bit less shenanigans on this than something else. All right, so let's say, for example, up into June 9th, it hits 1371. Let's see if there's evidence that that's a level that we want to hit at that time. I'm going to do something a little bit biased here. I'm going to go backwards this way. It's pretty darn close. Okay. So let's try this. Let's say that this might be a longer term one, but this is definitely a possibility here. It does look like it goes from, what else is at 1371? That's freaky. That's the one. It's not the other one. There is one here, but it's like peak to final upthrust, like right there. So there's a final move right here in June last summer. You could see that trend would be met there. The bigger one though is actually more interesting to me, which is this guy. It has 1, 2, 3 hits. This would be considered the SOW, original SOW, because when it came up to build out, this is where it comes back down before the bigger distribution. So there's markers as it's widening. See how it widened out? 1, 2, 3, 4, 5, and then it goes up 50, 50. Those 3 right there, I think, are the ones. That's pretty easy to tell. So let's go back even further. I want to see what that does backwards. That might be the bigger wave cross down. The market defines it however the market defines it. I mean, you can say what you want to say, but that obviously was a trend that bears were like 1, 2, 3 hitting, establishing. And then notice right here, when it dropped through on Wolf, yeah, that's where the anchor is. Oh, yeah, there it is. Here, you can see it coming off that level, and then here. So these were distribution motions beneath to get beneath that marker. I think this is old. I don't need that one anymore. I don't think I need this one anymore either. So the reason this was built here, we would say, is because the reason it closed here and then gapped down huge amounts beneath this trend is this is actually a triangulation to this point in the future, which is, it looks like 308. It could be 3. I don't really know for sure when it's going to get there. This looks like the 14th of May, which is about when you expect the move to start. So at lowest, it's going to come to $3, I think. But then you're going to look at there to there. What we're going to do is we're going to take that middle, if we can find it. Get rid of that. And I'm going to keep that one. That one's interesting. I might keep that too. I'll use this dotted line. Ooh. I find this to be kind of endlessly fascinating because the way these ears are established at the top, like these markers, there's always like 3 or 4 different possibilities, and I just find it really interesting how they always seem to like add up. That's way off. I'm going to do that one. This is actually pretty close. That one goes higher. And then this would be the last one. And this would probably go lower. We're not talking about definite trends. We're talking about like you can think about it more like a fan. Like you're establishing possible trajectory points, and look at where they're aiming. From March, that one's pretty clean. Really clean. That one goes from right out to May, and then June 9th is over there. This one goes all the way to June 24th, I suppose. So there's like a 1, 2, 3. Actually, that one's kind of right in the middle, isn't it? So if we were to look at this as like a range, these project out to $3 in this particular range right there. Like all three of those are the hits. It's pretty interesting to me. So maybe at latest it could be like June 24th, and that technically could be a pivot. I mean, we don't know for sure it's going to go with everything else. So it's not safe to like think about options maybe before that time, and I would probably even go out further into like August. I've been thinking a lot about that for AMC and GME. It's like probably not going to touch anything in June. Like I think it'll get there, but I think July and August are better. Like this pivot right here on that particular one might be the best one, which is like July 29th. Because that would be a low pivot, which usually reflects a high hit. So anyways, that actually looks really good. So I'm short term pretty bullish on Wolf. I think it can get up to maybe 8 something. I'd be pretty surprised if it broke higher than maybe 815 at this point. It's this level right here, the second wave right there. I think that's likely where it's going to find itself turning going into April. And then honestly, I don't know because I don't know what that catalyst is going to do. But it just based on the chart, it looks more bearish, like it would be a pivot down. So and this would drop low. Yeah, hard to say. Something like that. And then worst case, I suppose it only comes up to like 686, which would be like the middle. But I think right now this is measuring out pretty good. There's nothing really here very inconsistent. Everything's kind of anchored where you would expect it to be anchored. So I know it sounds kind of bad, but I'd almost be waiting for like a bear trade at this point if you're not already in it. IWM's up quite a bit. This is pushing. It's trying to hold above there. It's almost to that breakdown on that triangle. So that level that we're at right now is, we had that rising wedge back here in February. It's at that February 21st breakdown level. This is a floor. So this was lost right after earnings. There was a dump. It rejected on that floor. So it's pushing up above it right now. It is technically widening the creek. So like anything, we would talk about these in separate, maybe in separate kind of passes. One is maybe more related to kind of locally, like what's going on. This is kind of old news. These two. These are short term. Alexa, turn off the timer. And then the rest of these are kind of bowing out. So right now, this is kind of the steepest one I can see locally. Yeah, maybe right there. That's the next one up. That's probably the hit we were thinking about earlier when we were talking about maybe pushing up a little higher to closer to 114, which someone else called out. I thought that was a really good number. I think that's correct. because this creek was never retested. It seems a little odd. It's a really random out there angle, but it didn't come back there. Probably didn't come back there because in order to get back there, it had to break out of the trend. So when we were looking back in this region, I probably did use it. I don't remember. We'd have to go back and look at the chart, but it looks right. It looks like it could have come up because of the support there at 118. It looks like it could have come up to 118 and then turned down, but they did not go because they probably didn't want to break that trend, and they didn't need to, to enlist buyers or anything. So without needing to break that trend and kind of like pop there, they went ahead and respected on the 1 hour, the EMA and that creek, well, the trend line. And it's also the middle. So yeah, that's a pretty good bracket potentially. We're still in the same spot. We really haven't moved that far anyways. We're kind of right here. So there's not really much to say just yet. We're probably close enough, but we might get a little bit of a pop up to 114.50s before it's said and done. I don't know. It's turned down already, so I'm not sure. May save it for later. Because in theory, it doesn't matter when it tests this. You could test it now. You could test it after some kind of a pullback. It just has at some point it's going to come up and hit that marker, which is probably going to coincide with a 114 break anyways, which is the triangulation we really need on this assessment. So this could be a widening also 1, 2, 3, 4, 5 from this particular point, which means that the widening began right at 116. It's the same level. It's this little pocket. So there's not really much to say. We go way beyond at this point. I think we're right about 118, 120 area being like the top. The bigger possibility, I suppose, if it goes and just kind of bonks a trend, could just be like on an extension, for example, that then hooks underneath it. You could have it like pop up and then drop back underneath it on the second. So best case scenario, we're talking like 120 something, but most 120 to 125. But most likely, it's probably not going to go much beyond 118. So I'm still thinking about this in terms of a multi-leg trade. I'm not sure the market's that bullish. It looks really bullish today for a relief bounce here. But I'm thinking we may need to go ahead and get some relief here on this push since we're kind of overbought. Yeah. MPW still just kind of chilling out. This is one that, I don't know, man. This is another one that we kind of nailed it right on the head. I mean, it went right to the target. This has kind of been updated a couple times, but we had the target right here. And I'd identified it probably hit this point early March. This is one that did not kind of go with the market in terms of the downside. It has since had some issues. I mean, this is all technically a bearish top because it's made 1, 2, 3 big pushes here while RSI is coming down. This is a daily. This isn't like a small time frame. It's a pretty high time frame. I don't think that in the grand scheme of things, like I'm not sure that this really matters that much. It did the same thing back here where it kind of eked up and then broke out. But this is a very different ticker. I mean, this is a REIT, which is a real estate investment trust. It's a company that's had some issues with tenants over the last few years since COVID. And they own a huge proportion of hospital/medical properties. It's an American-based, Texas-based company, and they have no reason to not be profitable. I'll just say that. And they do pay a dividend, which is nice if you just want to hold it long term. The dividend amount has come down quite a bit. It used to be 15, now it's almost half, right? It's 8. So come down quite a bit, but The reason I like this trade, and I have liked it since way back here around like $4, is because A, it had some really good potential for pops up to sixes. Now that's already happened 3 times. That doesn't mean it's going to be bullish right now. It hasn't yet made a new advancement to a new high. So there's certainly a chance here. You have to keep the door open because of the way this is set up, that this is kind of a rounded top. And you got to keep the door open for the possibility that this isn't actually a spring. We talked about this just a few minutes ago because we were talking about on the bigger picture, looking at, what was that other one we were looking at? I don't even know. We were looking at Wolf just a minute ago, and it had that, like a long time ago, years ago, it had that bearish input about where we may go in the future. Well, the same thing would apply to something like MPW. You have to kind of pay attention, and it's not always about whether or not it was bearish at that time or this and that and the other. It's just what was going on here was that it was making up thrusts, and this one particularly comes up and then immediately comes down and makes a new low. You could read it as a auto reaction type thing and a top, but the auto reaction came down and it did push below these early supports. So there's questions in my brain about how strong this actually is. And I've said before, I think it's very possible, and I've had this on the chart for the majority of the year at this point, because we first started looking this back in May of last year, that it could have this kind of similar build out to AMC. What looks different about it is how high this came on this push, which does make me wonder if we can get like an LPS here around 480 instead of going back low. But I have to say, like, I'm not going to flinch on this one. I think it's pretty straightforward that the LPS level is 5 to 485, but I think that if you look at the greater picture, it's so similar in some ways to what happened to AMC in 2020. I don't see why this couldn't come all the way back down to the 2s and even make a new low. It may not make sense to you if you're looking at this because you're like, well, why wouldn't it just like break out and go? It hasn't made an SOS yet. That's really important. It looks like it's bullish. I know that. But when we look at the big picture on the daily, it's like, man, I don't know. What I'd like to see is, and I haven't looked at on balance volume in a while. I'm not sure when I charted this, what I did it on. I might have done it on the 4-hour. So let's see if that fits. Yeah. So I had anticipated this might come up high and then drop back down again, being like this is a pop up that doesn't exceed the middle, but it did, right? And then come back down. And I said that would be very similar to what happened on AMC. But we did look at AMC recently, and now I'm like thinking about that. There was a widening here, and it actually went all the way up to the top of that widening before it came back down in 2020. And when it did come back down, it came back down to this green level, but it did so after selling down to a new low, which this does not look like. So the same thing, so that was not right because it didn't break down, but I didn't necessarily think it would. I think that was probably us just talking about what happens if this hits here and doesn't go up. We had the triangulation up and it went up. This particular one would look like it would pop. I think it's the same deal. I think it's going to maybe go up to the top again, be like a triple top. That's kind of crazy to think about. I don't know how this is going to go up there and not come back all the way. I think that level's correct. I'm not going to change it. This also has like a widening. I wonder. Well, if that widening breaks, it would come back down to the start, which is the floor. Yeah, so I'm really skeptical on this one. I think there's a good cause that this is going to squeeze, but I'm not positive it's going to happen right this second. In theory, this is like a massive widening. You can see it. It's huge. Monumental even, right? Just absolutely gigantic. And if it does break out, it's probably going to head back towards this level like $14. No problems. But I had measured it out previously and it looked really wide. compared to like AMC and stuff. It just has like a longer time period of sideways. It just didn't seem quite right. And at the time we were thinking AMC would do something similar. It never did quite the same thing, but yeah, it's looking like, I think we're right. It's like that February 2026 area. I think the market's going to squeeze the last 6 months of the year. And then I think next year is going to be bad. I think 2026 is going to be not a good year. I think we're getting a market squeeze second half of the year this year, and then next year is going to be lousy. Yeah, this looks like it's going to squeeze into September, which is a weird number or a weird day. But that's what I saw on AMC too, and I was like, that's really strange. I think it's like AMC walks out into September and then keeps chopping up until February, and it chops in a different way than perhaps this one does. But is the SOS necessary? Yeah, because if this fails to go up higher here, even if it popped up a little bit, guys, there's a gap fill. And this is what I'm wondering. We may see it come up in this late last minute run right here on the 31st or something. You might see it pop up to fill this gap. But then if it stalls out, again, barring the news, that gap is filled, sure. But that's not a sign of strength because it already pushed up higher here. So this is kind of a strange one because of how high it came up. It came up way high. But it's like what happened on AMC. It came up way high in the range before it dropped low. I think what happens is that this then comes down and resets. They're gonna flush out. It's just a question in my mind about where it goes after that. I'm going to clean this up a bit. Yeah, I think this is going to be like a 4 top, like a double M here and then a little double M. You see that as like a 1, 2, but then the retracement for this 1, 2 is really low because this guy is actually where that creek is now. So see how it went too far too fast? So I think it's going to pop to like 630 and fill this gap. So 1, 2, 3, 4. If it gets above it and it SOSs, we're in a different situation. Because an SOS leads to either the breakout and or it leads to a backup. An SOS with a backup here does not kill any of this momentum. I think an SOS with a backup gives you the chance at an LPS. So it doesn't come down to like $3. Weirdly, this is the same move we're talking about on Wolf. It sounds like a completely different beast, but because it looks so much broader. But really, it's the same move because we're talking about Wolf going up here to like 8 and then dropping to like 3. I mean, all of these are losing like half their value or more. And I think that's broader market what we've seen as well, as a lot of these would lose a huge amount of value before they have a massive market squeeze. Yeah, and then the gap right there. Look at the triangulation here. This looks like it closed at like 477. 478. So it can't come back beneath that level, ideally. And I can see there that this triangulates to March 27th, which would be like a top pivot, more than likely. I better make sure of that, though. So let me double check. That's a very important figure, if that's the case. Yeah. Mm-hmm. Oof. That's Tuesday. That's not far away. So, based on what I'm seeing here, This looks like a 1, 2, 3, and then 4. And then the cross up on this is there. There's no guarantees here it's going to go all the way up really high, but it's actually kind of flat. I think this is going to pop here earlier than expected. Here's what will look like if it breaks down versus breaking out. It's pretty straightforward actually, because there should be a trend right there. And I'm going to change that so it's not like a weird dotted line. I'm also going to truncate it because it doesn't need to be that long. There's another one. That's the better one, I think. That's really lower. And there's another one that's steeper here. So here's what happens if it breaks out. It doesn't need to go significantly higher because the gap is at 624. The red line here is important. It's like a cross trend. That's where the breakdown would be. So it hits like 625. Then it closes like beneath that marker. And honestly, I don't think this participates in the rest of the run. I think it waits till April 1st or 2nd. Probably goes sideways here. And then by April 2nd, it probably has reached this end. It looked like a shallow S-curve to our naked eye. It looked like a little S-curve down. It wouldn't be moving very fast. But that would be the end of it if it does that. So that's a pivot, high pivot, and then you're coming down low. And then unfortunately, you don't use that pivot. That's just a top pivot. You could, but I don't think that's probably the best. That looks like a 50-50 into earnings. So maybe they do. I don't know. Maybe they just walk it down slow this way. I guess it's a maybe. I don't know. I said I don't think they do that, but then I was like, who knows? What's more likely, though, is that this middle is the M, which is actually back here. It's really tight. That's like the halfway point on that. I don't think that's it. I don't think it drops that fast. So I think this probably drops down decently slow. All things considered. It's like 2 weeks of downside, basically. 2 to 3 weeks of downside here. Once it hits this particular part of the schematic, this is like a 50-50 drop from 624, back through 532 down to 450. So it goes back to 450. There is a tiny gap at 440. Where is that gap? This is a weird gap. Looks like 440. I don't know. Maybe that's what it goes for. There's another one down here at 414. This is where the decisions are made, probably, in the grand scheme of things. So this is only if there's an SOS, in my opinion. I mean, let's leave it at that for now. I could go into every scenario known to man, but I think that would be the best course of action. So probably at this point, you get a pretty nasty sell down. Based on everything else, it seems like that 440 might actually be I hate to say it, but it may actually be the midpoint from whatever top, or at least initially. We'll see if that leads to a new low. So 624, 440. I bet it does. Yeah, it does. I could just see it. The way that the markers are set up. This was like the midpoint here. But if you're going to have a sell down, you take it down through this level and that'd be like the halfway point. So that may not make a lower low initially. It does look like going into May, it could be down here at 310. So it could still be an LPS, you know, by those standards. That's actually still an LPS. This is a higher low. That does put you in that May 13th area, potentially. If you use earnings as a center point here for a move, let's just say it got there by then. This is May 20th now. So that does track quite well with everything else. And then the good news is that is likely going to be halfway point the other way. So that marker where it's breaking down here, which really looks like the same level that it did over there, which is at like 595. Might as well just say 6, but this becomes quite a big move quite quickly. This is the squeeze, I suppose. That goes all the way up to, should be in that pocket right there, 1143. So that's in the right spot. It is in the right spot. It may be a little slower than expected because the trajectory down was kind of slow. So I had it marked off here to the side. It implies the move. Man, I don't know why I changed that. Because usually what I do is I put the middle where it breaks out right here. See that? See how it broke out? It shouldn't have been where it was, which is low. I put it on the low spot, but I usually do it right on the breakout. I bet that fixes it. Yes, it does. It fixes it. So now it's in the right spot. Now the trajectories match as they would be expected to match. Now this may not make a lower low. It may not. It may come down to this level at 315 and not actually breach low. It may not get to these creeks. It seems like that might be the case. I'm a little confused by the timing of it here, but it is there. Everything else kind of fits pretty well. Yep. That actually does make more sense. It's the wrong one. It's not here. Yep. Now look at where that arc is and check this out. Because it should be right at the marker in the center of the overall picture, but then check out where it is, like right here on this breakdown and this breakout. Now that we've adjusted it just slightly, look at where that is right here on that push out. It's right on top of it. And now look at where the breakdown would be expected. Right there. Right there. It's like right in the right spot. So this is also aptly situated for a distribution, like very, very tight. It looks really correct to me. The downside targets are a little more iffy because they're not going to likely hit the creeks. So, I mean, we could talk about 330, we could talk about 315. It's kind of a mixed. It is mixed because I think that there's it may not be that we need to come all the way that low at all. It may be like just down to this level. Let's try that one. Let's try 313 or 330 instead. The trajectories are just estimations anyways. They're just kind of structural. They usually end up being correct. When you go back in retrospect and you look at these things, they're almost always like where they're supposed to be. But the of greater concern is kind of these halfway point markers. So I'm going to try to mess with these a little bit more. So that actually came a little high. Now let's try it with just 330. Since that one looks more like a 50-50, if we got that's perfect. Holy cow. That's right on the nose. That's 595 to 1070. That's perfect. So they may have 330 in mind and not a new low here. This is going to be like the big buy zone for MPW. Now, I know you guys are like, well, I don't want to split my attention between too much stuff. But remember, the market always has like winners and losers, you know, and not everything's going to be perfect. You get to that point where if the move happens, great, it happens. But I think a lot of this is going to be like this initial move is going to be super fast. A lot of it's just going to depend on how you trade it. Like this initial move might be really fast and then the later move might be fast, but there'd be a lot of chop in the middle potentially, just based on the timing. So trajectory doesn't have to mirror, it does not, but there's typically something kind of similar that happens on either side. This is not going to help. I need to do it the other way. I don't think I can do it that way, the arrow. So like this initial drop in was super violent and it jumped over all this liquidity. Well, look at all the time that's been spent near that liquidity. They just bracketed right around where they want that liquidity. Now they're going to go back low. When they pass back through the liquidity, they've already traded it. So in theory, the measure here as a mirroring actually works quite well. As a mirroring, this gives you a sense of continuity. So this may actually work out. I am keeping my eye up above on IWM and stuff. I know we got to look at other stuff. Try not to spend too much time on any one stock for too long. I'm just trying to finish this. I'm almost there. It's actually pretty close. This would imply that potential here is, yeah, by June, mid-June, you're up here. So the initial move may not be some massive move like AMC had. I mean, it could. We don't know. That move was like a massive move that pushed up and then came back down and resettled in the proper position. But the initial pump was like massive, right? What's more regular typically is more correct, at least for me and what I look for. So this would, again, say that there's a probable really good buy-in from 3 to 6, which is 100%. And then there's another possible buy-in later in the year, near maybe September. I think it's going to come back to the same level before it takes off, which is typical. If it's not 495, then it's going to be the top here, 554 here. So either way, it's going to be in this little pocket or right above it. So if it goes a little beyond, you could watch like 560, but the second trade is probably anyway still from 560. Once it finds support there, the second trade goes from somewhere around September into the new year, and that's another 100%. So there's two major 100% moves here with a little gap in between. Of note is the lower trajectory, because we've had this one on the screen for quite a while, this red one. And this is important because when we look at AMC, it took the steeper trajectory, which would be here. It was like this first split between the ears. This is really the second split. If you count this as a cat ear, 1, 2, this is the second split between the ears. Wave down, wave up. So this is a wave up, and then down, up again. So we're really looking at layers of a setup. And I think that makes sense because if you look at where that would be going into February 2026, And this could be an example of one that maybe doesn't follow a traditional path of, oh, we think it's going to break down or something. That does time out to the multi-year cycle right there, February, March. The rest of it might seem a little silly because you're like, well, you're saying you think it's 2026 going to be a bad year or something. I'm not sure about that. But if you look at the rest of this in terms of trajectory out, it's not exactly great anyways. By that point, you're already like up here. You've only got maybe you got like $3 or $4 more just to get to 14. If the widening really did start at 20, which is a possibility that it's up there near 20. I don't think it's impossible it keeps going, but it wouldn't get there till the following year at this trajectory. So who knows? You look at 2026 from that point of view, it's like, all right, well, you're going to have a new creek right there. There's certainly a possibility this comes back down before coming back up. We would have to wait. That's way off in the future. And actually would expect it to probably come back to 6, the top, and retest the top. So it may not follow this perfect kind of like, and actually the way I have this drawn out, it also looks like a narrowing here. So there's that. It'll be interesting to see if that is what happens, if we get this narrowing. I say that because there's been a noticeable pattern for a lot of the market where if it widens on the way down and you break out, you get a narrowing on the way up and vice versa. And I know that both are turnaround patterns, but I find it curious that they often accompany one another, like the widening and then the contraction, because it's just sort of backwards. I don't know. Wouldn't expect it to be the case every time, but it seems to be that way. Like it mirrors. I can't find it. I don't want that. Maybe. The reason I was looking for it real quick was to get an idea of direction. If it only goes here to here, and then you follow this trajectory out to roughly around February or March, it kind of fits the bill. It does look pretty close. Even more so if you use this, but I don't really like that one as much. Like there. That works quite well. And then this looks like an SOW right there. Even though it's a creek jump, it's also breaking down. You guys are like, that doesn't even happen, Booksy. I know, but there would be a weakness. It would look like it loses this trend. And then you would use that as your creek for later. So it peaks in like March and then retraces. From that point of 0.5 retracement, it's got to peak enough. Oh, I see. It's got to peak enough that it can't come back down completely through the previous tops, which is that level that we've got here at like 680, but it really goes to like 650. So from 330 up to the tops here, that's the peak level. Right there. So in February and March, you get this kind of peaking out around 12s. And then I think you're going to get a retracement back down to a 50% retracement back to 650. And that's why 2026 looks ugly, because year over year, it would be like a second decline, or it'd be like a new decline, because it would be, they start the year at like up here around in January around 10, maybe a little lower, around 9 or something. And then probably takes a long time. Builds out really low. Going into 2027. That's actually where we see it pivoting. Anyways. Yeah. It's a January 2027. It's a secondary run. That's where it goes to 20. All right. Well, I like that. We'll see. We'll see what happens. I bet by wavelength, it's probably about correct anyways. I don't want to get too into detail. Yes, I should have known. I had this marked off at one point, but now if we go to the center of this wave down here, which is on September 2024, and you can see if you go back to April when the breakdown happened at 19 through that middle, look where the top is. It's in the February 2027. So that's like a fuller wave. That's pretty solid. So I think 2026 looks like kind of a down year. And then really year over year, it's probably going to look sort of flat. I know I just said down, but the overall look of it is down. But then year over year, it probably goes 850. It's going to be at 850 again. It looks like a nothing burger, but it's spent the whole year kind of tracking down. You know, breaking down and all this other junk after peaking really early in the year. It then spends most of the year down, but it actually resets at like 0, 0, 0 over the year. It's like slightly down or something, you know what I mean? Year over year. That clears their books, and then they take it up, start all over again. It's kind of like what happens on the daily candles, isn't it? You get these big pumps early in the day, and then by the end of the week, or early in the week, and then by the end of the week, for example, it chills out. Anyways, I like this stock for a lot of reasons. So if it goes down to 330, I'm buying a lot long term, but I'll probably also think about repositioning at 12. I don't know about options on this. I think leaps might be okay, but I haven't had a lot of success with options on it. They're just dead most of the time. Sitting at $6 right now. I don't know, man. I just got to go with my gut on this one. I think it's going to pump and then drop. I don't know what could cause it to go up continuously from here. I think tomorrow is going to be a peak day for the market in some levels. Looks like SPY is still edging up. Honestly, if this is an S-curve, and I was kind of thinking it would come back, we'll see. But if this is an S-curve, it's going to go the full distance. Like the full measured distance we made was to 583. I think it's going to go there. That middle point, that first pullback it made, would be like the halfway point from the bottom. I swear I'm not fudging it, okay? I know it looks like I'm just giving myself a pat on the back, but that really is where it is. It goes right up to 582.50. It's solid. AMD's making that push as well. Now this one's curious. So I wonder now if I look at the same thing. That early pullback today, what was it, around 10? It's about an hour ago. This is at 1 hour. What is this chart? 30-minute? AMC's doing a good job. It's holding up where we want it to hold up. So if you're wondering about AMC, it's not dead. It's just chilling out. It's holding where we want it to hold. That's a good thing. AMC is a late bloomer. Remember, it often runs like last second. It's also got GME earnings tomorrow, so let's see. 1 hour, about 10. Can't see it. We have to go down to 30 minute. Let's go over here. Let's see where it was, right around 10. It's actually pretty low. That bottom is at 109.71. Doesn't look right. That doesn't look like the halfway point on an S curve. It looked okay on SPY. So there was a wave jump here, like a 1-2, and then it took off again. So I guess you could measure from the low at 104. That would probably be okay. Since this is a 1-2, the 3-4, 1-2. It's an ugly looking move. There should be some other kind of, you're like, no, it's not, it's beautiful. There should be some other kind of indication that it's a stopping point coming up. I'm trying to see where it might be. I'm looking at this other cross up. Buried in this cross up, there should be another one opposite. So remember, like every time there's an M cross, you can flip the chart and there should be another one to the opposite side. Because yeah, we jumped up. This is easy to see right there. Really easy, right? We flipped the chart just now. Okay, this one's like super easy. But that's because we're looking at it from the bull side and we're like, oh, yeah, see, it made the right jump. But then there's always one on the bear side that was also leapt. I guess it'd be these two tops right here. It looks like it's coursing through it right now. So maybe that's why that's the middle. And I was picking on how bizarre it looked, but that could be why that was picked as like a center fold. There's got to be something else, though. It can't just be that. I don't know. That looks clean. That looks right. And it's kind of interacting with it. That was the 10 a.m. mark. It was right there. Is there any other? That's way high. That already jumped over. There's this one. This is a weird, like, extreme here. These two. If we were looking at it from an upside down perspective, we might have said this was a sign of weakness because it came below the previous floor. So we're looking backwards now, upside down land. So we would call this an SOS. It does make another low. That's a possibility. That's a really strong trend right there. And there's a wave cross right here for it. That does look like it's measuring out to maybe a Tuesday peaking, but there's two, so I've got to do both. This one's really far. Really far. I don't know. It's kind of the same question. There's really nothing changed from earlier. Because, like, I definitely could see why this might back all the way up before continuing. And I just don't know, like, it's already so overblown, you know? We may very well hit these targets, but it may not do it all at once. If Tuesday is a big day, you could see something like this. I'm interested to see if we start selling off midday. We're not there yet, but everything has a pattern to it. And like this makes sense to me. So I'm looking at the broader picture. I'm looking at where these higher targets are. This one seems the most out there. Like the least likely, because it's too low. This looks correct to me as like a truer middle, and this one does too. These two are both pretty good. This is kind of redundant. We don't need this right now. This is like the steeper trend. I don't think it's going to really apply anyways. We may still be green today, but it wouldn't surprise me if we backed up quite a bit to like 209. That 10 o'clock support from this morning. I'm going to go ahead. I think I'm going to just exit my AMD positions because I'm thinking that it's going to back up pretty hard to near 109. Let me see if, I don't know, man. These look like they're kind of, this is super weird. Look at this weirdness on, look at that. I don't know what to make of that on SPY. It's like flat. I mean, they're up 150%. So I bought at 73. They're at 181. So I think I'm going to go ahead and exit. So it's a good trade on my part. I'm happy with that. I just don't have a lot of confidence right this second that it's going to really keep going. So I got 184. So I got a good exit. So that's good. I'm happy with that. That's really the best I'm going to get for the week anyways, probably the Monday move. If it keeps going, it keeps going. I've got the IWM calls. I don't know if I'm going to get out of those just yet. I'll probably hold on to them for a little longer. A lot of them are flipped pretty green. So one of them's up like 10%. So I might get out of that one early in the day. That way, if we get a pullback into tomorrow and then pop again, I'll have an opportunity this afternoon to buy back in. It seems a little bit on the nose, I know, but I'm really looking to maximize efficiency here. So I'm going to keep one of these. This one's actually pretty close, isn't it? Sure. You know what? No. I'm going to change that. I'm going to get rid of the, I don't usually like to do that, but I'm going to get rid of the lower ones. Actually, let's go with the middle. It's essentially like a break-even move, but I'm okay with that because I want to reposition. So I think if it comes down again, I'm going to get a better entry. If it doesn't, then it really doesn't make a huge difference. It doesn't kill me because I got out of scratch. So there's no real loss at all to talk about anyways. I still have the lower ones. So I had sets of 3 at 3, 3, 3, and they were paired at like 30, 35, 37 kind of thing. And like something like that. Right now the price is sitting at like 36 or something. I don't know. I had them averaged out in that region. And so it was like 33, 35, 37. And I just got out for basically a 37. It's just scratched. But that's okay because I think if it comes down again, it's going to be below that. No, it was not. It must have been 36 because it was a scratch. So, yeah. So that's a good place to be. It's a good place to be because if I can get out of the higher traded ones, then it has a midday pullback. I think that 10 a.m. level is going to be pretty important. So you want to mark that off on your charts. I just suspect that this is it for now and that we're probably going to retrace back to that 10 a.m. level or thereabouts. And for AMD, that's at like 109.50s or 109.70s. That backup would be enough. Now, it's very possible if this does top that there could be a deeper retracement, in which case I'm looking all the way back down to 106. I don't want to call that because I don't know if that's reasonable yet. I have to see if that makes any sense. Yeah, well, I mean, there was a after hours gap. There's obviously the actual gap. I don't know, man. I think they might tease it out. This goes back to that level. This would be like an SOW. Maybe it goes to like 108, like somewhere in between. So like breaks through, but then pumps back up again. And Tuesday would be the bigger up day in the market. It's still a green day. Got to understand. We're probably going to close above where we opened, or where we closed to close from Friday to today would still be green. But I'm inclined to think that we're going to actually see, I don't know how we're going to do that though if we do it now. If I'm wrong, then this is just an S curve. It's going to go way higher, but it's all going to happen in one day. But I'm holding on to some stuff. But these AMD ones have burned me in the past. So I'm going to wait and see if it has that pullback. And then I think Tuesday might be a pivotal day for the market. I don't know. Is there anything else news-wise coming out Tuesday? Maybe we gap down Tuesday morning or something and then just start running up. And we break the creeks and just go, like jump the creeks and take off. Then we hit those markers we really want to hit. A little higher. 3, 4. I bet you. All right. Looking good though. All right. I'm out of those with roughly 150, I think something like that. That was a pretty high gain too on that. As anything, don't trade based on what I'm doing. Just do what you want to do. I'm just thinking at this point, it's either going to just keep squeezing and pump up higher, in which case I'm okay. I've got some exposure. Pause it, go somewhere else. And if it drops back down, then I'm well positioned to get back in. I have more capital, so I'm not worried about it. And it's halfway, day's halfway over. So yeah, big thanks to Jen today for that. Appreciate that. I think ARM, I'll have to check that out. We'll see. There's a lot going on with AMC that we'd have to talk about, but this is starting to look a little more like that bearish scenario of like, what if we break down? But I think Tuesday is going to be a big potential pivot day here. Yeah, I know what you mean by head and shoulder inverse, but that would be Tuesday the 25th. That's earnings. That's the same idea. That's what I'm saying. I'm not sure. You'd have to see I think this would be pretty weak if it doesn't at least make a higher high. I don't think it's a great inverted head and shoulder without the higher high here, because again, I just look at that as like a weakness. Like that bulls aren't able to push resistance up here at 314 is not a good sign. The first resistance was already pushed, but we want to see that on this M cross down, it kind of just floated. Well, that's okay. Eventually, though, see how it makes this sign of strength right here for them. It was a big SOW for us on the bear side. But that ultimately is marked, if you look closely, it's marked by these higher lows, or these lower highs, set backwards, coming down this way, right? Well, that's now the creek that we're trying to like face. Weakness would be us coming back down here in order to get a spring, in my opinion, in this case. Maybe that's what happens and we get the spring low, but I think that's a weak move because it's showing that we can't even make a high without going down to get more buyers, which is bad. Does that make sense? It's like we have to dip down to below $2, below $3 or $2.96 to get buyers. That's a kind of a crappy place to be, you know. Certainly, you look at this and you're thinking, well, sure. I mean, it looks probable. You know, there could be this backup to go test this creek. Well, we should have already done that, is what I'm trying to say. Like, it really doesn't need to be retested 6 or 7 times. You know, we've been interacting with it nonstop since Tuesday last week, the 18th. So I'm not sure. Maybe we need to hit it, but that would be Tuesday at close. Overall, that doesn't really like bode super well in my book because I'm like, well, why here are they making advances, right? And then here we'd be coming back down and losing ground, essentially. Double bottom is what we need, but they didn't need a double top kind of thing in terms of bear to bull ratio. Man, maybe it makes sense. I don't know. Because again, we're thinking about this maybe coming back down later anyways. It's not the end of the world. It's just another sign that like, yeah, this may not be done with downside. We're just establishing more more chances that we're going to come down low in the future. So I would prefer from a trading perspective, okay? Like as somebody who wants to see upside on AMC or wants to trade upside on AMC, I would prefer if we could see that build a higher high here. So I know I've made it a little too complicated because I was trying to say count the numbers 1, 2, and then 3, 4. But we're still kind of doing that. We haven't really made this decision yet. I would prefer as a bull to see it do the 3, 4 up high and make the higher high and push above this top. See how this one came up and it pushed this resistance? I want to see this come up and push this resistance. Then if we want to pull back into Tuesday afternoon, I think we could be on top here at 3 instead of really low. We can come back pretty far, I guess. There's a, I think there's another trend right here that may follow through. It's not, it shouldn't be right there. It should be like, actually that one's really low, isn't it? Meh. All right, I got to be honest. I think I'm being a little bit lazy with the AMC chart today. What I'm going to do is I'll work on it this afternoon, and I'll try to share it again tomorrow, because normally if we get an iteration down, and we did, then the markers out are almost always pretty straightforward. I know there's one right here at 335. That one we've talked about. There should be another one maybe at 367. I guess that's all there. It's just not really like high detail. Because typically this ends up being how you can triangulate some stuff. I wonder if this is going to be slower than expected. Can't be too slow though. April 2nd's right there. Yeah, all right. Well, from a strength perspective, I would prefer to see it. All I'm going to say is from a strength perspective, I'd prefer to see it come above 314. I'll just say that for now. Bottom wise, we just don't want it to come back below 296 if we can avoid that. And otherwise, technically, either of these could end up being kind of bullish. And remember, like big picture, this is ultimately probably where it's going anyways. The 370s with possible extension beyond to 4s. It's not looking great for a much bigger move. There was another one that we used from January and September. November, not September. It's this guy. The January 6th area. Let's say that's this one right here. Right there. That's the bigger like possible extension right there. That's the $4 mark, if it can get there. All right. I'm done. I got to get going. Appreciate you guys hanging out. Good stuff today, overall. I'm not bearish by any means, and I don't know exactly what's going to happen in the future right here. You know, if it builds out, it builds out. We'll keep going. It's just a squeezy type motion. If it is halfway, I mean, that's a really big move, for example, for AMD. If it's halfway, it's going to probably hit 120. I would be surprised if we don't have some kind of a backup. It seems likely to me to back up into Tuesday and break again, maybe even on Wednesday and come back up higher. But, you know, there's a risk you take when you exit something early that you're going to get a backup. Maybe you don't get it. I'm just kind of reading through the tea leaves here. Everything's kind of overbought, highly overbought, even up to like the 4-hour. Squeeze is a squeeze, but we've approached this level of, all right, we're hitting resistances. This is sort of the logical place to take a breather. We're seeing that on the broader market, sort of stopped, paused. And I'm thinking, again, I think that 10 a.m. marker is pretty significant. Not really sure exactly why, but it seems like it's marking off a valley level that you don't want to go back below. Like it crossed up the creeks right there. So those are going to be pivot points of good importance. If it drops beneath them, maybe 50% further down, like halfway. If it kind of stays above them, that's a little bit more strength, and you can potentially buy back in or do whatever you want to do if it breaks out there. So it'll be a good day to trade tomorrow and the next day if we get that. SPY looks a little healthier than, to me anyways, than IWM, but both of them are in good positions to potentially keep going. Yeah, actually, I don't know. They're both about the same. They both went up, got a little overbought on multiple time frames. So, yeah, I don't know. It's pretty solid. It's right where it needs to be. Again, this is a good place to see it back up. So, I will personally be waiting. I'm going to see what happens with AMC. That's the one I'm like least certain about right now because I'm like, I don't know, it held. It could just cross up and over. But I'm going to be kind of watching GME today, watching all of them really. AMD probably to some degree, IWM, see if there's a good place to get back in. And if I got out too early, I got out too early. But I've still got these calls, so we'll just keep those. Yeah, and I think I'm going to be, I mean, my buy-in on MPW has been really great, but if it pops here and then drops down, I'm probably going to be getting out at 6 on MPW right here. I don't know. FANG's the big loser right now for me. Pretty unhappy about it. So, It's the only one on my chart right now that I'm like, it made the move, it just didn't make any money. Kind of irritated, and there's nothing I can do about it. Just got to be patient, see what happens midweek. I might roll them, but I think it's expensive, so I don't know. Most irritated about that. All right, guys. I hope you have a good one. I'll talk to you later. Tomorrow, probably.